Hello and a warm welcome to Tax File. I am your host, Laure Bala Hassan, and it's great to have you with us for another exciting and informative episode. Today's lineup is packed with value. We'll begin with tax news, bringing you the latest updates and developments shaping the tax landscape. In our Did You Know segment, we'll share interesting facts and tips to help you stay tax smart. Then we head to the streets for Vox Pop, where everyday Nigerians share their thoughts on key tax issues. We'll unpack those views in our knowledge zone, breaking down the facts and offering context you can use. Our Professional Insight segment features experts' analysis that simplifies complex tax matters that helps you make better financial decisions. And finally, What's on the Net brings your questions, feedback and comments from our online community, plus our responses. It's a full engaging package, so sit tight because Tax File starts now. And now, the news. The Nigeria Revenue Service says it is on course to achieve a record revenue performance in 2026, with first half collections reaching an estimated 21.6 trillion. The service attributes the gains to tax reforms, digitalization, and stronger revenue administration under the new tax regime. Jasra Tawheed reports.
The Nigeria Revenue Service says it is targeting about 50 trillion naira in revenue this year, after collecting an estimated 21.6 trillion naira in the first half of 2026. The agency says the performance reflects sustained growth in tax administration since its transition from the Federal Inland Revenue Service, with non-oil taxes now accounting for about 76% of total collections. It adds that Nigeria's tax to GDP ratio has improved from 10.3% in May 2023 to 13% in the first half of 2026. The service attributes the improvements to the implementation of the new tax reform laws, the nationwide rollout of e-invoicing for large taxpayers, expanded revenue responsibilities under the Nigeria Revenue Service Establishment Act and the Executive Order 9, which requires upstream oil and gas operators to remit royalties and taxes directly into the Federation account. According to the NRS, continued investment in technology, workforce development, and tax compliance will be the key to achieving the government's target of raising Nigeria's tax to GDP ratio to 18%, while sustaining revenue growth through 2027.
Nigeria's manufacturing sector has recorded its strongest value-added tax performance in 4 years, reflecting increased economic activity, improved tax compliance, and the positive impact of the implementation of the new tax laws. The latest figures released by the National Bureau of Statistics also show the sector remains the country's biggest contributor to VAT revenue. Evelyn Shija has that report.
Nigeria's manufacturing sector remitted a record 329.59 billion naira in value-added tax in the first quarter of 2026, making it the highest quarterly contribution by the sector in 4 years. According to data from the National Bureau of Statistics, the figure represents a 12.8% increase from the 292.12 billion naira recorded in the last quarter of 2025. Manufacturing also accounted for nearly 30% of the country's total VAT collection of 2.42 trillion naira during the period, making it the single largest contributor among all sectors. The strong performance reflects steady growth in the manufacturing sector over the past 4 years, despite economic challenges. Industry stakeholders say the improved figures demonstrate increased taxable business activity and growing confidence in the economy. They also commended the federal government for providing clear implementation guidelines for the new tax laws, urging businesses to comply with the new tax regime while calling for improvements to tax filing platforms to facilitate ease of compliance.
And the executive chairman of the Nigeria Revenue Service, NRS, Zak Adedeji, has reaffirmed the service's commitment to supporting government institutions in strengthening public service delivery and promoting sustainable governance. He said stronger collaboration across public institutions is essential to building efficient institutions and delivering better outcomes for Nigerians. Adedeji made the remarks while receiving the management of the Pension Transitional Arrangement Directorate (PTAD) on a courtesy visit to the NRS headquarters in Abuja. Aisha Abdulkader has the reports.
The executive chairman of the Nigerian Revenue Service (NRS), Zak Adedeji, has reaffirmed the service's commitment to supporting government institutions in delivering efficient, transparent, and sustainable public services. Speaking during a courtesy visit by the management of the Pension Transitional Arrangement Directorate (PTAD), led by its executive secretary, Mrs. Tolulope Odunaya, Adedeji described PTAD and the National Pension Commission (PENCOM) as strategic institutions whose work is critical to the welfare of retired public servants. He said, strengthening Nigerians' pension administration is an investment in the future and pledged the NRS's continued support within the provisions of the law to help government institutions deliver effectively. Adedeji also commended PTAD's technology-driven reforms, particularly its pension convalidation process, saying the initiative has enhanced service delivery, improved operational efficiency, and strengthened public confidence in the country's pension system. In response, PTAD Executive Secretary Mrs. Tolulope Odunaya expressed appreciation for the NRS's support and reaffirmed the Directorate's commitment to working with relevant government agencies to improve public service delivery.
Nigeria has recorded a major milestone in the taxation of the digital economy, collecting more than 120 million US dollars in value-added tax from non-resident digital service providers over the past 3 years. The achievement reflects the impact of reforms designed to ensure global digital businesses pay their fair share of tax in Nigeria. Our correspondent Ejura Etu Okpanachi has the reports.
Nigeria's efforts to strengthen the taxation of the digital economy are yielding significant results. Speaking at the African Tax Administration Forum (ATAF) annual meetings, Director of Investigations at the Nigeria Revenue Service (NRS), Matthew Osaneku, said Nigeria collected more than 120 million US dollars in VAT from non-resident digital service providers between 2023 and 2025. Following reforms supported by ATAF's Digital Services Toolkit.
We're able to collect 1.1 trillion from VAT alone, and that has increased to about 8.6 trillion naira in 2025. So prior to now, total collection from VAT accounts for about 22%. But because of all these reforms, the VAT contribution accounts for about 30 to 32%.
Osaneku said the reforms introduced clearer VAT rules and a simplified compliance framework for foreign digital businesses, leading to steady revenue growth over the 3-year period.
We were able to develop 4 new tax laws: the Nigerian Tax Act, Nigerian Tax Application Act, Nigerian Revenue Service Establishment Act, and Joint Revenue Board Establishment Act. And all these provisions are beginning to have a lot of positive effect on domestic resource mobilization accruing to Nigeria.
He added that ATAF's technical support has also strengthened Nigerians' broader VAT reforms and e-invoicing initiatives, highlighting how African-led tax solutions are helping countries boost domestic revenue mobilization, protect their tax base, and respond to the growing challenges of the digital economy.
And that's a wrap on the news. Let's join Mariam on the Vox Pop segment.
Have you ever wondered what the term unearned income is? And are you wondering if this unearned income is taxable? Stay with us. My name is Mariam Julie Adura, welcoming you to the segment. What do you understand by unearned income?
Thank you very much, madam. Unearned income is also known as passive income. As a matter of fact, they are called frank investment income. We have dividends, we have rent, and we have interest. As a matter of fact, you cannot use unearned income, which is the withholding tax you pay from unearned income to offset company income tax. It's a final tax.
What do you understand by unearned income?
Thank you. These incomes are incomes that we don't actively engage in getting them. They are otherwise called passive incomes. These incomes such as interest, dividends, rent, they are all examples of unearned incomes. And they are total final income in themselves. In other words, they are also referred to as frank investment income. Thank you.
The future of tax is here. Are you ready? This is Rev 360, a smarter way to manage your taxes. Better efficiency, stronger compliance, and improved taxpayers' experience. End-to-end automation, real-time processing, and seamless compliance. Now all on one intelligent platform. Secure and transparent, no stress, just fast, smooth compliance. Rev 360. This is the future. NRS. Together we rise. Together we prosper.
Did you know non-earned income refers to income that is not derived from active employment, trade, business, or performance of services? For more information, please visit www.nrs.gov.ng.
Ashu Abe takes us on the Knowledge Zone.
Hello and welcome to Knowledge Zone, where we dive deeper into the interesting conversations had on the streets. I remain your host, Ashu Abe. On today's episode, we'll be answering the question, what do you understand by non-earned income? Under the Nigerian Tax Act 2025, non-earned income refers to income that is not derived from active employment, trade, business, or the performance of services. Instead, it's the income generated from owning assets or investments. Examples include dividends, interest, rents, royalties, amenities, and other investment or property-related income. Such income is generally subject to tax under the applicable provisions of the Act, although certain exemptions or reliefs may apply depending on the nature of the income and the recipient. The distinction between earned and non-earned income is important because the tax treatment, applicable rates, exemptions, and collection mechanisms may differ. For example, many types of non-earned incomes are subject to withholding tax at source, which may constitute a final tax in some cases or serve as a credit against the recipient's final tax liability, depending on the provisions of the Nigerian Tax Act 2025 and the taxpayer's circumstances. Over to you, Lore.
And now to our professional insight segment.
My name is Kehinde Kajeshomo. I'm the Director of the Competent Authority Departments of the Nigerian Revenue Service. Based on my function, I supervise the Competent Authority function, and the Competent Authority function entails international tax policy. So all international tax policy function of the service and is undertaken in my department, and these functions include tax treaty negotiation and implementation. It includes exchange of information processes. We have the advanced pricing agreements negotiation, We have international dispute resolution under the mutual agreement procedure, and many other international tax functions, including the negotiation and development of international tax rules, standards, and policies under the different international tax bodies, including the OECD, the United Nations, ECOWAS, WATAF, ATAF, South Center, G24, and so many other bodies where international tax rules, policies, and other discussion on international tax, those international tax rules have been discussed. We represent the service. And in summary, when we look at the object of the department or how we carry out those functions, we collaborate with the different agencies, ministries, and the functions within the service for the purpose of negotiation, ratification, and implementation of tax treaties. We also collaborate with the relevant bodies, including the competent authority of our treaty partners, for the purpose of implementing our exchange of information provisions in those agreements. So in summary, in terms of exchange of information, we supervise the processes of exchange of information in the system. And as I said earlier, we also carry out the discussion or represent Nigeria in the discussion in respect of changes and updates to international tax rules, policies, and standards. Compliance with tax obligation is important because that's what will actually make you a good citizen or national of Nigeria. So, and your compliance doesn't start and end with paying tax. In fact, the compliance is a process, starting with registration, filing, then payment of tax, and so on and so forth. So it doesn't start and end with payment of tax. You have to first start with registration and filing returns. And when we are talking of filing returns, there are many returns. And these particular returns under my department are some of them, which is the common reporting, the returns under the common reporting standard, and the returns under the country by country, which is the country by country reports. And of course, the one that will come later will be the crypto asset reporting framework, the returns under that framework will also be due for filing by taxpayers or relevant persons that are expected to file. So it is important. Why is it important that we file that returns? It's important for tax administration process. Sometimes it is not even to levy tax on that taxpayer himself. For instance, if as the bank you are expected to deliver some returns in respect of your customers, that is actually not to tax the bank itself, but to ensure that every taxpayer fulfill their obligations. So we are able to use that returns to track their process of complying with the relevant, the taxpayers. We are able to track their compliance with the tax laws. So it helps to prevent tax evasion, tax avoidance, and other tax abuse. When we have that information, we're able to do appropriate profiling of taxpayers and ensure that they pay their taxes. So it is important that those are expected to file returns file. Now, if they don't file, so number one is that the first thing we even do is we encourage them to file. We have various assistance processes we have put in place to ensure that we encourage them to file. We have various engagement process, enlightenment process, assistance we provide to help them to comply. For instance, as I said earlier, if you have any challenge, there's dedicated processes you can get through to us, and our officers are on standby to provide relevant assistance. So if we have done all those and the taxpayer fails to file, so number one, if it's failure to file, then the penalty for the common reporting standard and the country by country reports is 10 million naira for the first month that the taxpayer failed to file. Then for subsequent months, 1 million naira for every month, the failure continues. So that means if I said that for country by country reports, it is due May 31st. So if a taxpayer failed to file by May 31st, penalty of 10 million, then the next month, June, he still failed to file, another 1 million, making 11 million. By July, another 1 million until the taxpayer file. So that is for failure to file. Then for filing a wrong returns, or what we call misstatements or misleading reports, then in that instance, the taxpayer is liable to 5 million penalty for that failure. Yes, the advantage is that they are good citizens. We know them as good citizens, and the taxpayer we are dealing with are large, mostly international companies, and they will tell you that most international companies, they don't want to see in their reports a payment called penalty. So, because it's a dent, especially for companies that are abroad, seeing such penalty in their financials says something of who they are, a non-compliant company. So most international companies, they don't want to have penalties reported in their account, and that's encourage them to file. And also that's also when they submit reports and there's no their financial statement, there's no such penalty, it tells their shareholders, their customers, and everybody doing business with them that they are responsible citizens or responsible companies. Under the tax treaties, if you are entitled, if you are a resident, as I said earlier, you can claim your treaty benefit. And they won't say, because one of the penalties for failure to file is not that we will not give you a treaty benefit. If you are entitled to treaty benefit, you get your treaty benefit. And if you fail to file, you get penalty for it. So we don't use one to settle the other.
Over to Swateku for what's on the net.
Good day and welcome to What's on the Net. My name is Joyce Swateku. At Pride of Africa is asking, please, I am unable to sign back into my Ref 360, but I have noticed that when I last signed in, I didn't see where to file for VAT for the month of May. Please, has it been removed? If you are unable to sign into Ref 360, kindly use the password reset option or contact the NRS help desk if the issue persists. Regarding your VAT return, if your company's annual turnover is below 100 million, the VAT filing option may be inactive. To enable it, log into Ref 360, go to My Profile, select Manage Tax Filing Profile, switch VAT to Active, and save your changes. To file for a previous month, go to Self-Tax Filing, select Taxes Due, choose Request Extra Assessment, select VAT and the relevant filing period, then generate the assessment and proceed with your filing. At Akim Mustafa is saying, this is really helpful. I thank you for sharing. The Ref 360 platform has been a significant step forward for tax compliance in Nigeria. Many businesses and tax professionals are still getting familiar with the interface, so step-by-step guides like the NRS videos are invaluable. One thing I'll add, it's worth double-checking that your TIN and VAT registration details are correctly updated on the platform before filing, as mismatches have been causing issues for some taxpayers. Great initiative sharing this with the community. Thank you for your kind feedback, Akim. We appreciate your support and are pleased to know that you found the video helpful. You are absolutely right. Keeping TIN and VAT registration details up to date can help prevent filing issues on Ref 360. NRS remains committed to providing taxpayers with the guidance and tools they need to meet their tax obligations with ease. Thank you for being part of the journey towards improving tax compliance. Over to you, Laurie.
And that's where we'll leave it for today's episode of Tax File. We hope you've learned something new and gained deeper understanding of how taxes impact our daily lives. Don't forget to stay connected, follow us on all our social media platforms, and keep the conversation going. I am Laure Bala Hassan, thanking you for watching. Until next time, stay informed, stay compliant, and keep watching Tax File. NRS, together we rise, together we prosper.